Well, the market has been churning about. We saw a display, a fractal display of what the S&P and the NASDAQ have been doing on a daily basis. We saw that in a fractal way today in an intraday basis with the market going up, down, and enough to make your head spin if you're that kind of a day trader. It seems that there's a bit of uncertainty when these averages get to new highs. This has been ongoing since early 2015. When you see a major average approach new highs, it doesn't really make it much further beyond those highs before it starts to backtrack again. And so consequently, we've got a ceiling, a price ceiling, it seems, that is somewhat evident on some of these averages, especially on the S&P, where you just get this flat, choppy, riptide type of environment near old highs. And of course, it's I think the markets are having that that old internal argument about QE versus higher rates versus the inability of QE to do its job, and that causes a growing loss of confidence in the Fed and other central banks. Meanwhile, this money that does get printed has to find a home, so it does find a home in the tallest standing midget, which is the U.S. markets. Today we also saw the dollar renewed some of its strength, because that too is the tallest standing midget. And this was against the British pound, which is hitting new recent lows against the dollar. I think $1.27 buys you a pound now. And these levels haven't been seen in ages. But there is concern about the Brexit move and what that will do to the pound, the value there.
Hey, Dr.
Yeah.
Is there an ETF for the pound?
There should be. Let me.
Anybody know it out
Yeah,
there?
I don't know it offhand, but there should be, because there's ETFs for all these different currencies. Like it's probably FX,
B? No.
maybe FXG or FXB. Let's FX.
No.
Let's see.
I don't know. Is anybody?
Yeah, because they do have like FXF and FXE. FXE is the euro.
Frank, FXE is the euro, right? And
So
G. Let's see. No.
I tried G, British pound, P, FXP.
Nobody else seems to know. I don't know. ProShares, Ultra, FTSE China.
Oh wait. Oh no, that's something else. So yeah, it'll be out there.
Gold was rallying today, and I think where that basically showed up the most though was in gold. I mean, gold. These things got hammered today. That's ugly.
Yeah, the worst sell-off in a long time. At least since February, but even maybe worse because they kept heading lower.
Somebody said
silver and gold.
Here it is. Here's it. Yeah.
What is it?
FXB here. GBB FXB. Thanks for that, you guys. Yeah, you can see it broke to lower lows. So maybe the Brexit thing is an issue after all. I don't know. Wasn't there some talk today about the European Central Bank easing up on their easing up? Is that they were gonna what was it? What they're?
You mean slow down their pace of QE?
Yeah. What do they call that? Taper. That's right. I like that word. Sounds like a new haircut, but.
Yeah, I don't know. They don't really have things figured out, because if they're saying that, that kind of flies in the face of what they were saying before. And
well, they talk out of
I think
both
they want to try to be.
Basically, and
yeah.
The Fed does the same thing. The Fed heads get up there and talk tough, and then when they meet, they don't do anything. So the market,
they're political bodies.
It seems to me that the indexes, and even today was pretty indicative of the indexes just reflecting this sort of confusion, you know. So they're up or they're down, they're up, they're down. And how many distribution days now on the NASDAQ?
4. We've got 4, because today was another.
How about the S&P? Let's take a look over here. Here's the S&P. The S&P looks dog-eared to me, and it looks more like there's a slight divergence here. So you basically have this bear flag sort of thing going on. You see that? And so you got this after this break here, so it's a little pull, and then it's just like a bear flag, and it's been wedging up. Now we're starting to roll, so I wonder if we're going to break down. I don't know. What do you think the odds are of us breaking lower are?
Well, given all things considered, based on the price volume of the indices, I would say you have better odds of this at least correcting to some extent. I mean, that could be a very small correction, of course, as the market is wont to do these days.
Right.
But I would think that it would go lower than it go before it goes higher, and you know. But this QE environment makes things kind of makes all bets are off because if you just have some slow news environments where there's nothing materially negative coming through the headlines, then the markets have a tendency to drift higher because that money's got to find a home.
Yeah, I mean the other option is just to forget about the indexes and focus on individual stock ideas. So Momo was a good mover today. That looks like a trend line breakout on a pocket pivot. But I was looking at this yesterday and actually bought it yesterday on the undercut of this low here. So you see this low 2308. So it undercuts yesterday and it closes back above. I'm sorry, 2208 on that low. It closes back above it. So to me, that's a on the undercut and rally setup. Remember, you guys, how you play an undercut and rally setup. You use the intraday low here, which is what is that? 23. Here it is, 2208. It's the lower low. So you use that as your undercut level. So once you undercut, you move back above that level, and you can buy in right there using that level. You can add maybe 1 or 2% if you want, maybe a little more to your stop on that if it doesn't work. But that's one way I've noticed that you can buy stocks like this and get in early before you get the move. Now the tricky part is that this thing kept going and it rocketed pretty good, up over 10, almost 11% in one day, right? Yeah.
It was 11%.
Yeah, and it does
Yeah,
it
just
on a
about.
day, on a crappy market day like today. And so that sort of highlights or underpins the whole idea of just ignoring the indexes and just focusing on the stock setups you see. And as long as something's working and you're not getting stopped out, you can hang and give it a chance, and then maybe you have a gain where you can sell into, because now you're at the top of the range. And my guess, I would be surprised if you run into resistance here and pull back in. What do you think, Dr. K?
Well, it is up 11% today, so it probably has to back and fill maybe for a day and then go higher. We put out that report earlier today and then updated that one because anyone who bought yesterday obviously is sitting on a nice profit. If you bought it today when it was still around the 10-day moving average,
We put out an alert on that, didn't we?
yeah, because it looked like it was going to be a pocket pivot. But some people might have wanted to wait a little bit. But again, in this kind of market, if you wait, you don't want to be buying this thing when it's up 6 or 7%. When the report was put out, this thing was still up around, I think, 4%. It was around its 10-day, so
Yeah.
it was not extended relative to the context of the chart. But now, of course, you wouldn't be buying it up here. This is nosebleed levels. If you did buy it, if you're sitting on a position, I would just keep your stops really tight on, say, half the position or more, because it might have to back and fill a little bit. But of course, if tomorrow's a relatively good day for the markets, then this thing could, make another stab at new highs.
Highs, yeah.
But then I would look to sell it because, well, I mean, you could do a repeat of August where it had a nice move straight up.
Yeah.
But I would keep your stops very tight on this one. And
Also,
you could have done that in August. You could have kept the stops really tight and still maintained a position as it went from the breakout around 17 all the way up to 25.
right.
Because it never really did pull back enough to hit a stop. Even if you had a tight stop on this one, you could have held it all the way through. I mean, obviously, at some point, you want to start taking profits. Maybe you're going to take profits a couple days earlier. Nothing wrong with that.
Yeah, I think my approach on this would be if you bought it down here and you run up, you go from 16 to what, 22, 24 up in this area, and now you've got, how much is that, like 35, 40% gain pretty rapidly.
16
So
to 24, actually 16 to 24 would be a 50% gain.
yeah,
So
so you'd be
that's
taking
pretty
that
huge.
somewhere in there and then waiting for this to pull back in and then look to buy it back. And what I see here is you get a break here, so you get this support, and that's like a supporting pocket pivot off the 20-day. And then as you roll back in, this is a Wyckofffian retest. So you're retesting this low, but you're never quite getting there, and volume is declining the whole way. So as I'm watching that, I'm looking at a Wyckofffian retest of this low here. So we'll make it spiral out, and then so it rolls over and it pulls back in, but the volume's drying up, and so I'm looking for a turn. And for me, the easiest way to pick off the turn is to set up, look at this as an undercut and rally setup, and be ready to move on it once it gets back above, and look for that to turn back up, because the volume's just been drying up, and it's actually what was it today? How much? like probably 40% below average, right?
Well, you're talking about on Momo.
Yeah.
It had 4 days in a row of volume that was typically less than, typically 30 to 40% under average.
Yeah.
4 days in a row, and then of course today was the big move. So that's another reason I think I pointed out, and if I didn't, basically yesterday was a nice buy point because it's a quiet day and it's a mid-bar close. I mean, I know a lot of people might say, wait a minute, it looks like it's breaking down further. It's still under two major moving averages, the 10 and the 20-day, but in context to what it was able to demonstrate over those 4 days of quiet volume plus mid-bar close plus the close above the low of 22.08.
Yeah, so
All
the
of that
undercut
bodes in.
rally setup, basically.
Yeah,
Yeah, I mean, so you can interpret
exactly.
this and you put all the puzzle pieces together and you could get an idea that this was a good trade, and it was a great trade. So the only problem is, if you're getting a 10% move, you'd like to have a 100% position. That's pretty hard to do in this market. So, and I noticed also that these were moving along with Weibo was moving, and here's one had a pocket pivot, 6 days ago, and then we talked about this over the weekend as one we thought was in position, even though it looked a little bit funky, right, on this volume breakdown right here. You had some volume. That was on Friday, wasn't it? Which might have been related to quarter end, and so it pulled in 20-day, but that's where it becomes viable. You could have bought it yesterday because the volume is drying up. You can see that right here. And then it turns out of there. Now, how would you handle this now, Dr. K, if you had this one?
Well, it's a breakout in a market that's not kind to breakouts. But in context with this chart, it's got huge price momentum. What it has broken up before, it tends to go either a couple steps or a lot. And so I would probably be sitting in this position, but with a tight stop. It could repeat, say, August, but it could also repeat what it did in May and July. And well, I mean, what it did in May and July wasn't bad. It broke out in May at around 20, 24, 25, and then it went all the way up to 29 and a half. So that's what is that? That's like a 20%. It's like a 20% move or a 15% move in a few days.
Yeah.
So I'd watch for that.
You get, that's pretty nice. My thinking is it'll probably pull in, and you might look at the top of the base as a trailing stop if you're trying to play this for some big gain. But, I think this market doesn't give you those sorts of gains. They're very rare, and it's tough to tell when you have something like that. And I also noticed that these were moving along with the VIPs. I think I talked about this one last week as one of these Teenage Mutant Ninja Ugly Ducklings. They're all stocks that are in the teens, trading in the teens and trying to turn up off the lows of patterns after getting decimated. So VIPS is one, and that was up today on a pocket pivot off the 10-day line off to new highs. Now, in this case, I would have identified it like I did last week on the basis of this move initially, and then let it come in. Right at the 20-day yesterday, boom, you get a move. And what is that on a percentage basis? Not quite 10% in 2 days. No, wait a minute. What is that? 1469
No,
up
that's
to,
pretty good.
yeah, that's a pretty decent
Up to
move
16
too.
and a half. That's about 12%.
Yeah. So I noticed these were moving today, and they're acting pretty well. So, I know some people, I saw some comments and tweets and whatnot on the various social media sites, and some people, I'm out of here, I'm taking my profits, and this market's done, and blah blah blah. And I don't really operate from such a binary point of view. Like you're either long or you're short, and the market's up or down. It seems to be all over the place, and it's really a function. Even on a day like today where you sell off pretty good, you've got some stocks that look pretty decent, but you've got to be in the right ones pretty much on the right day. So the hot IPOs, they look to me, Dr. K, like they've lost their Momo. Acacia, somebody's asking me whether ACAT is not totally new, but an older IPO. I think it's pretty much totally new. So it came out in May. That's pretty young. It's only a few months old. I wouldn't classify that as an old IPO. I'd classify Weibo, which came public back in, what is this? Back in May of 2015, that would be an older IPO to me. So from my perspective, so I don't really consider Acacia an older IPO. To me, it's more new merchandise in this market, especially since it got rolling back in August, really. But
Yeah, it's
you're
actually
asking,
one of the price.
is there too much supply on the left-hand side of the chart for an undercut and rally, in your opinion? I think your question is way off base to begin with when you're asking me about an opinion. Uh, Setups are setups. If you look at Momo, you could ask the question, was there too much supply on the left side for an undercut and rally? Frequently, an undercut and rally situation will occur from a base, or undercutting the lows of a base that's been going on for several weeks. So the idea of undercut and rally is you finally shake everyone out and you turn back to the upside, or it's just basing normally and it does this little undercut to fake everyone out, because that's what happens to everybody in this market. They get faked out when things look ugly. So the idea that somehow there's too much supply on the left side doesn't really apply. So, and it's not a matter of having an opinion, it's a matter of just playing the setup the way it is. So I would look at it one of two ways. I think when you're undercutting this low here, which is 128. So you undercut it yesterday and you touched the 50-day line. Now you're set up for an undercut and rally, and you have a couple other reference lows. You could use this low too, but maybe this low comes into play. So this is 103.01. Where do we close? 102. So you didn't clear this low, but you cleared this low. So that could be enough for an undercut and rally. And you don't need an opinion to play an undercut and rally or evaluate the pattern like, oh, there's 6 weeks too many on the left side and there's too much overhead, and you pull out your overhead measurement device and try to, that's all a bunch of baloney. So get that completely out of your head, because all you have to do is play the setup as it lies. So number one, what is your previous low? 100.28. If the stock pushes back above that low, then you can buy at that point, and then you use 100.28 as your stop. If it moves back below, then you would quickly exit, or you could give it 2 to 3% additional downside for your stop, or in this case you also have the 50-day line as a guide as well for support. So you would think it might hold the 50-day line, and if it's undercutting and turning, then you can keep things pretty tight just on that basis alone. Okay, so now today you close above this low. You close at 102, so you're above this low right here. So you're above this low and you're above this low, but you're not above this low. But you've undercut the lows of the pattern. So you're in a position where you can undercut and rally. The only way you know whether it's going to work is if it holds above that 100.28 low, or you could even use a 50-day line if you wanted to give a little more room. Okay, so that's how you deal with it. There's no opinions about anything. There's no magical measurements of a base or overhead supply that give you some sort of indication. It's what everybody wants in the market. They want some simple equation. They don't have to think. They don't have to use their brain. They don't have to develop any judgment. They just sit there and plug a couple of numbers into an equation, a mindless equation, and then try and come up with an answer that then gives them the conviction to place a trade. So I think it's just a matter of understanding how an undercut and rally works, and understanding it within the context of Acacia's chart, if you're trying to work it in Acacia, and where it lies with respect to the prior lows in the pattern, as well as a 50-day line. Okay, so that's all you need to deal with. You don't need my opinion. I mean, the setup is there. If you try it out, then it doesn't work, then you may have to bail out. Now, I would also point out that sometimes you have to, and I would say this is very common for an undercut and rally type of setup, you might have to go in and buy and then sell and then buy again, or maybe do that another time or so before it actually works. Because I can tell you, yesterday I was playing around with Momo. I'm going to clean this all up, give you guys a little lesson here. So let's look at the Momo chart. Yesterday you can see how it closed at 22.09, exactly 1 penny above 22.08, which is the low over here. Okay, but during the day, let's see if I can find my 620 chart for yesterday. Got to get all these ugly looking. There it is. Okay, so we can see from yesterday that this thing broke in the morning and then it rallied. You can see about midday. Let me make this even bigger. You can see that we rallied above the 22.08 level right here, okay, early in the day. So that I was actually, what I did initially is I took a position based on the fact that you had a MACD stretch here. Just not a big one, a small one, and then you had a cross right in here. It's just holding tight right here. See that? So you get the MACD cross, the orange line is crossing above the blue line. So I'm on the right track, I figure, and when it comes up through here, then I double the position. But what happens here is it breaks, and as soon as it does that, I sell. So I'm just gone. okay? And I actually get out with a little profit, seeing as how I bought part of my position down in here. Okay, now what happens is it flutters around, and then finally it turns later on in the day. You get a 620 buy signal here. So I could actually come back into the stock anticipating that it may continue higher, and then you get above 2208 by the close and you're in. And your stop at that point becomes 2208 if you want to run it as a hard stop the way I like to, and then looking for another way to come back in if it's able to hold up and turn back. Or you just use 2208 plus, say, 2 to 3%, which might be what is that? What's 1% there? 23 cents, 22 cents? Yeah, so
Yeah.
44 cents of downside from there. So 2208 minus 44 cents, or give it 3%, which is a really tight stop, okay, compared to 8%. And we'll get into what's wrong with trying to use 8% stops in this market. But you can see how that's how you would be coming in, and so you got to buy in, you sell, you come back in. So you might have to do that a couple of times, unless if I had bought here and then bought again here and then decided, okay, I'm going to use a 3% stop, it actually would have kept me in the trade because the stop would have been somewhere down in here and it never got there. So that would have been another way that worked. But either way, I just want to be in for the move today, and assuming, not like anybody knew it was going to have a move, but you just want to get in position in case something does undercut and rally, and that's exactly what happened. So that's how I would work something like that. So if you want to apply that to Acacia, I'm sure that was all over the place today. We got, let's see, this morning. So yesterday it actually looked like it was going to do that. I think you had a turn, would have been, what, 10.2, so that would have been in here. 10.3 actually. So you got it coming up through, what's that, 100.28 low. So there's where it comes up above the 100.28 low. Hopefully you guys can.
Yeah, it opened at the 50-day and then moved higher from there.
Yeah. So, but as soon as it gets back above the 100.28 low, which is right here in the morning, right after the open, because it'll gap down like this at the open, and then it comes back up right at the opening, then you could have been back on it there. And then if you give it a percent, maybe you're probably still holding on to it here. 2%, you definitely would still be in. But you also have a 620 buy signal right here, right at the opening. So, that could have brought you in. That would have been good for at least a trade. Okay, now if you're sitting there with the position at that point, okay, now the next day, it rallies all day and it holds up and actually holds that 100.28 low all day into the close. Wait a minute, let's see, this was today. Yeah, so today it held that all day into the close, and you would have been good on that. Now yesterday, if you had tried to do it, let's see, where was the opening? Here, you actually had that work for you, but you never were really undercutting the lows there. So you came in here. Have I got the right day here, Dr. K? 9:30, that's the wrong day. I had it right. Here it is. Is this the right day? Yeah, this is yesterday. Yeah, so yesterday you came down and you traded down, 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 and then finally you never really traded back above that low, did you? You just went below.
It closed close to the low.
Yeah, and then you undercut it. So you didn't really have it until this morning. So that could have brought you in on an undercut and rally on Acacia because it closed below that low. It closed, so you would have been blown out anyways. But I don't think that it ever got back above the 100.28 level once it went below yesterday. I think that's correct. Yeah. So today was your only chance on the rally back up. Now the volume picks up, and you're coming off the 50-day, so it might work. But your stop, if you're long the thing, would be 100.28, and if you want to add a couple of percent there, then bingo. So, anyways. ACAD, you're talking about ACAD, not ASAM. Oh, did I misread that? It's this tiny type they have. That one's a dog. I wouldn't touch that with a 10-foot pole. And look at the pattern. So to me, that's a pod, death pod there. See the pod, and boom, it's rolling over. So that's not even applicable. The other thing is when you show people an undercut and rally, they want to start applying it to everything. And in this case, you did get one here, okay? But and you could try and play it as a trade if you want to, but that's all it is a trade that rolls over. So it doesn't mean that the next undercut through this low is going to necessarily produce a glorious new rally. Maybe you get a rally back up into the 200-day line, which is here. So you're maybe trying to over-apply things here. But this rule originally came out from my, or was derived from my work on the short side. So when something undercut, if I was say shorted this thing here and it undercut this low, I'd cover and then look to get short again somewhere up on the rally up into the 50-day or so. If I was looking to short it. But that's really how the undercut and rally started out. And what I noticed in this market, when you have a constructive base, like like Weibo's had a couple undercuts in the pattern. Over here you had some nice undercuts like here, where you undercut, come on pen, where are you? Where you undercut, here's an undercut here and an undercut this low and all these lows, and so that set it off. And then over here you undercut these lows. So when you're in a constructive base, I've noticed that you can undercut the lows of the base, sometimes even go through the 50-day moving average and look like you're going to come apart entirely, and then the thing turns around. But I've noticed those work really well in constructive patterns, and overall you would have to say that something like an acacia, for example, is still a constructive pattern, because it's really just, if we look at the weekly chart, it's really just a big base formation now, 6-7 weeks, almost 7 weeks long. Well, this is only 2 days here for the latest week, but you can see that's a base, so that's a bullish pattern. If you're looking at something like ACAT, I think you're just looking at it all wrong. And that's not to say that you can't pick off these little trades if you're really tricky. That's why a lot of times the stock I'm short, once it undercuts a prior low, I'll cover my short, and then sometimes I'll go long for a quick trade on the upside. I do that one a fair bit, but now you've undercut this low, so maybe you come back up into the 40-week line, which is just a little bit above, or the 200-day line, which is a little bit above. But I think you also have to look at these things within the context of the chart. So, everybody wants to take something and over-apply it without really understanding the nuances regarding the context of the overall chart. Okay, so don't assume that every undercut is necessarily going to be a rally unless you get back above that prior low, and then you got to be running things really tight. Here's an undercut that doesn't really work. There's no rally, so you get the U but no R, or sometimes you get a capital U and a small R because you don't get much of a rally. Anyways, ACIA commenced follow-on offering of 4.5 million shares. What was the price on that thing? Anybody know? I'm pulling that up right now. Did they just come up files? Company now sees blah 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 80, so they got higher revenues, blah blah blah. So they're now just starting it, looks like. So they haven't priced it yet, but they're raising their EPS. What's the stock doing right now after hours?
It's up to 2.8.
104.51. Yeah, okay, so you can see that if you had bought it today on the undercut and rally above that 100.28 low and held on to it because it closed above that, you'd be sitting pretty right now, assuming it opens up tomorrow morning. But I would be okay with buying it anywhere in here, and there'd probably be more buy points along the way. But that was one, and notice how you had to come in there on a day where the indexes are down. There's some uncertainty surrounding the stock. I would say, though, in general, if a stock is coming out with a secondary offering, I don't want to do anything until it prices. So, because sometimes they'll price it low or lower than it closes, and then you get a shot at buying it at a decent price, a lower price. So we'll see. Anyways, but I notice, now everybody is fixated on Acacia, and of course Twilio. Everybody's, anytime Twilio pulls back now, they got to buy it. But I think this kind of thing shows you why it's just moronic to buy breakouts. In most cases, there's better ways to get into stocks, and we know already that we saw the pocket pivot in here, and then it settled down, and then that was a good buy point right there before the breakout. Now, if you had bought this breakout, that actually would have worked, okay? But then if you're sitting there looking for a big move, you come all the way in and back to the 20-day line. I would rather be buying it down here so that once it breaks out, I got plenty of room to let it run, because I'm not going to be underwater right away if it turns the other way on me, and then sell into the extended movement, and then wait for it to set up again. And then the same thing again. You break out to new highs up here, and here's your new high breakout right there. There's actually two of them. This one fails, and I can just see all the IBD readers all jumping all over this thing up here. And IBD talks about this as being the buy point. But if you really look at this pattern, Wyckoff talks about points of control, I believe, control points. And so you can actually see a control point in this pattern just by eyeballing it. Can anybody see where that where the control point is in this base before this thing breaks out? So in this formation, where's the control point around? Nobody knows. The way I look at it, the 60 is one control point because it can't get above 60. So to me, this would be a base breakout here rather than this being your base breakout. In fact, to me, this is dumb because there's not enough going on here to provide support on a pullback. And that's exactly what you see. It comes right back in because there's no foundation of buyers here to hold the stock up. Now, in this area here, there's a pretty nice foundation of buyers. So you would look at that as being the top of the base, the true top of the base. So, you know, while we'd like to get in on the, you know, pocket pivot or right here, that's where you'd want to get in on, and it's a range breakout also. So you'd really, if you're going to buy the breakout, you buy it there because then you have the 60 level as a very tight stop or a tight guide for a stop. So it works pretty well. And if you're coming in late on this thing, you know, and you're dumb enough to buy it, and I guess I'm going to use the word dumb enough to buy it, on the breakout, then I think you deserve what you get because now you're down more than 8% if you bought anywhere in new high price ground above this high, which was 66.40. Now you're definitely 8, 10, maybe if you bought it up closer to 68, a lot, you know, 14, 13, 15% down now. So congratulations. But if you bought it here, now you're back to where you bought it. But then if you bought it there and then sold into the breakout, which is what I like to do. And you know, sometimes, like I said before, maybe I'm 5% too early. I don't care because eventually they come in and you buy them back. Now you have a low volume pullback. It looks scary. And it still might be a little bit scary. Would you buy this thing right here? But you're right on top of the top of the base, and you're at the 20-day line, a little bit under it. What do you think, Dr. K? And the volume is below average. What do you think? You buy?
Yeah, it's a pullback that's constructive, but I would still wait to see what it's going to do because you know, sometimes it's going to maybe break a little bit below this and then find its footing. But if it starts to go higher, I mean, it's a tricky one. I would just keep a close eye on this one because it's done everything. You know, the pullback has been on below average volume now for 2 days.
Today, yeah, and I think the warning sign here was the other day, like, and we talked about this over the weekend, it came down to the 10-day line and you had pretty heavy volume. So I didn't really like that, but I did actually buy it yesterday for a trade and then sold it when it went up because I could, on the 620, I think I was seeing something I didn't like. So I just took my quick little like 2 or 3 point profit off the lows, something like that. And then it rolled back below the 10-day line today and below the 20-day line as well. But that's because I think volume, there was enough buying. You know, everybody's fixated on this stock and they forget the fact that this thing came public at what, 16 bucks? So how much has it gone up? It's gone like up 4 times? Am I?
Yeah.
Yeah.
Fourfold.
And when did it come public? In
June.
Yeah, so like,
June,
it's like, what the
23rd.
hell do you want? You know, it's the Cinderella principle in effect in this market because it's not 1999. Things don't just keep going forever. You get a huge move on something, and then it's like people keep wanting to come back. They think Cinderella's. They want to keep coming back to the ball because they think Cinderella's going to show up. You know, and that's only going to happen if she has 4 legs and 4 shoes. You know, she's only got 2 shoes, and she maybe shows up twice. After that, she's out of shoes. So unless she's got more legs than we know, but that's basically what I call the Cinderella principle. You know, how many times can Cinderella show up at the ball? And people, I think, forget that. In this market, I think it's applicable. But look at this weekly pattern. I think it's helpful to go into detail, especially after today's action, which I think is interesting. And we might be in some trouble near term. I don't know. But you see these patterns. Look at this thing. It's way up there. And so it comes out of a 4-week flag formation. Everybody wants to call it a high tide flag, which if you guys remember, does anybody remember the really old weekend seminars that O'Neill used to put on? They were like $600, $700 for the whole day, and Bill was there doing the whole thing along with David Ryan. And whenever they got to the high tide flag part, David Ryan would say that Bill should tear that part out of his book. And I would say he's right because the pattern, you know, one example, I think it was Syntax was an example, and that's basically it. And the high tide flag has no magical meaning. It doesn't mean that the thing's has a God-given right to double from there. It is a constructive pattern, but you got to know how to play it, so I wouldn't get hung up on it. Somebody says, yes, I recall. Well, you're dating yourself, so just so you know. But, you know, so I think I might try this one out tomorrow. I like the 60 level as an area of support. The other thing is it looks a little bit scary because it hasn't held any of the support levels. And you probably have all the IBD readers who bought it on the breakout are getting blown out now, and so they're going to shake them out and then turn it higher. We'll see what happens tomorrow. But personally, myself, I'm long. I bought a little bit of UVXY right at the close, and I was long some things, the Momo. Oh, this other one real quick, EVGB, is that right? No, EVBG. I can't get these right. My dyslexia is bothering me. Yeah, Everbridge. This is a very interesting story. They make systems that allow government agencies, large corporations, whomever, to stay in touch with their staff and personnel, even in the event of an emergency or a disaster or terrorist attack where you have say the internet or the electrical grid go down. That's what they do. So it's a very interesting story, and I like the way this thing's hanging up there. This is what it looks like on a weekly, so there's really nothing there. But I thought this was viable yesterday along the 10-day. I sold it into the move today just because it looks a little bit loose, like it wants to come in, so it did come back in. But I'm watching to see if this thing tightens up along the 10-day line. You can see the 10-day line has only recently appeared. So you might want to check that one out. I know I've also watched this ELF, which I don't, you know about this one, Dr. K? It's just a retail cosmetics firm with declining margins and revenues, unlike Ulta, which is was a better stock and that had a great move on the upside, and now it's come apart and it's starting to look like a head and shoulders a little bit. This might be a shoulder, it might be the bottom of a new base, hard to say, but I don't really like this ELF that much, although it is pulling back at the top of this flat.
Numbers aren't so impressive either.
Yeah, it's kind of like, I don't know. So I'm not so hot about that one. This one is EVBG doesn't have any earnings right now, but I think that it's a tech stock and the concept is very compelling. So anyways, let's move along here. Line Corporation did not hold the Bible gap up. So if you see now, this is where if this is your Bible gap up day here, and you get nice volume down there. My arrows aren't so perfect, but you can get the idea. And so you're coming out of the top, and it's a breakout, but it's on a Bible gap up. Now this is why I like buying Bible gap ups, even if it's a base breakout. And the reason is you can use the low here, or you can use the gap here. If it holds the gap, you can use that as your stop, and that's pretty tight. So you can buy that and then just use that as your stop rather than saying, oh, I'm going to buy it here at 50 and get blown out 7% lower. Okay, this way, if it doesn't work, you buy it as close as you can. And we talked about this over the weekend, so you could have bought it yesterday or on Friday right near the 42, what is that? No, 48.20 low on the Bible gap up day. So you could have bought it there, and you would be out of it pretty quickly. I had a little bit of this. I was buying it yesterday, I think, right in here. And today I watched it trade. It tried to move up a little bit, like 47.98 or something like that earlier after coming in, because it opened below 48. It tried to move above 48, and then it just kind of flopped out. So I just blew it out. It's down at the 10-day line. Optimally, though, you see that now here's a little bit of a nuance here on this base. If we look at this, we can see that, you know, here's your new high breakout point. This is where IBD gets excited and tells you to buy stocks. Okay, I don't buy it there myself because there's still not a lot of activity in here to make this a solid area of potential support. You notice that it did work for a little bit because it held above this high here of this area for just a few days, and then there just wasn't enough in there, enough strong hands in there to keep it from drifting in. So now you've got this other area here that is much more complex. It's more developed. So I would think that the top here, what is the top of that base, Dr. K? Is that like 45 something?
45 and change, yeah, 45.34.
So, you know, that may be where it pulls into, and that might be close to the 20-day line. So, because you notice you get excited about Twilio dropping below the 20-day line. Well, it is, but it's staying on top of this low base range. So the same thing might happen with line. So, you know, I go through my charts and I work out where I might want to come into these things if they're pulling into these areas, and I can put in a tight stop, or have a reference point for a tight stop. And I think at this market, you have no idea whether we're starting a bear market or whether this is just a choppy range and eventually we're going to resolve one way or the other out of this thing. You have no idea. And so I think if you maintain this approach of buying constructive weakness, being creative and understanding all of the buy setups that are within what we call the OWL methodology, O'Neill, Wyckoff, and Livermore. And I would tell anybody, if you really want a great stock market education, read every single book by those three guys backwards and forwards. Right, Dr. K, wouldn't you agree?
Yeah, those are in the top three, and I constructed that list years ago.
Yeah.
But certainly the O'Neill and the Livermore and the Wyckoff, they're all in there, and I think they all got very high positions because they all are useful and should be read more than once. There's some of those books like How to Trade in Stocks by Jesse Livermore. That book, you could read that thing 7 times and still get information out of it that's useful.
Yeah, and actually that book was put out, in the 40s, I think. I actually have a really old copy of that thing. And
put it out in the late 30s, I think, when he wasn't doing so well, and he put it out to try to make some money off it. I mean, it was an invaluable book.
Yeah, and he talks about his original shakeout-plus-three. But see, if you read what he writes, it's a lot different than the way O'Neill was trying to sell it. And I think O'Neill's version is statistically deficient because Livermore's rule was based on a stock coming down and undercutting a prior low by at least 3 points. So it had to move at least 3 points below that prior low. Now, to me, an undercut is anything that moves below that prior low. And then he would buy it coming back up 3 points above that prior low. So there's a 6-point differential between where the stock bottoms out and where he comes in to buy it. The difference in the way I approach it, and I think line is a great example, is that I just buy once it gets back above the low. So once it's back above the low, that's a buy point. Okay, now it comes in again. Here's your low. It dips below intraday, but it closes back above. That's a buy point. Again, here you pull in, you undercut this low, and you try to get above this day, so you might be in and out, and because you close lower, so it doesn't make it, but then the next day it gets above it, and you could come back in and buy it, and then you'd be catching this move. And that happened twice. You had 3 undercut and rally setups in line as it was setting up, and you wouldn't have to be chasing it up into new high price ground like an idiot. Okay, and these work, and I don't see that. I think it's interesting on Twitter, if I say something that contradicts Can Slim or talks about something that isn't considered to be strict Can Slim, you see people stop following you. You'll see a couple drop off, which is fine with me. So I don't want idiots following me anyways. But people just have a hard time, like they get insulted about it. We talked about this before, but just forget about that. Set aside take the chip off your block and just study Wyckoff, study Livermore, and you'll see that a lot of this stuff is not old. This isn't new stuff I just made up. It isn't. I've adapted it to the current markets, but it works, and I'm going to go with what works. So Dr. K and I are both about studying the market in real time and figuring out what works. Now, that's a difficult problem in this market because it's a funky market. But that's what we both spend our time doing, is trying to figure out what is actually working in this market right now, not what worked in the market 25 years ago and how we're going to try to stick the round peg into a square hole continuously. So I think you do have to evolve with it. Anyways, so I would study all those guys. Okay, moving along. What stock I thought was interesting is Zendesk. Here's another one. It didn't quite, it undercut. Notice how you had an undercut of the prior low in here, and then it turned back up, so that was playable. And you've held that low in here on a closing basis. So here it is. You had a pocket pivot. Was that on Friday? Yeah, on Friday you had a pocket pivot, and it's hanging out real tight along the 10-day line. So keep that on your watch list. Alibaba didn't move so much with the with the Weibo and the Momos and the Vips today, but it hung in there okay as the market was selling up. It actually closed up a few cents, but you can see that volume is drawing up down here as the stock pulls in towards the 20-day. So the 20 days at 104.02, you're $1.50 above that, so 1.5% above that. You're pretty close. That could be your stop if you want to try and buy it here, but I think earnings are coming out soon, so be apprised. And we are moving into earnings season, so anything could happen. And I don't like to hold stocks into earnings most of the time unless I have a decent cushion. So anyways,
Well, for that particular stock.
yeah. Let's see. Do you have any favorite names? We could go, let's go through the, whoops, where are we? Here we go. Let's go through our focus list. So we're going to blow some of these turkeys up. Oh, heck. Come on, get in there. All right, here we go.
Yeah, there are a few that pulled back today in addition to the ones we've mentioned.
Yeah, so
like
there's
Vive and Pi and VRO.
There's Acacia. We already talked about that one. Here's Align Technology. So this is a piece of garbage, but notice it's undercutting all the lows, so maybe that's going to turn into an undercut and rally. What is it that you liked about this one, Dr. K?
ALGN?
Yeah.
When we put this one on, let's see, when this one was put on a while ago, or
No, it was put on like a week ago, wasn't it? You put it on in a pocket pivot, or a couple of weeks ago, like in here.
Was that the first time? Yeah.
So it didn't really
This one,
hold.
yeah, it had a good price momentum, but it slowed down. I mean, it's been stuck in this base, and doesn't seem to want to go anywhere. So, I mean, this one should be taken off the list because obviously anyone who bought this one within the base wouldn't be sitting with it, especially as it came through its 50-day.
Yeah, this would have been the pocket pivot, and it kind of rolled. For me, like what I would do is try and buy on the pullback into the 10 and 20 day. If it doesn't hold, then I'm pretty much gone. So when it gapped down yesterday, probably that was the time to get out. Did they come out with earnings? No, not till the end of the month. But the other part of this is that when these things look pretty ugly and it's undercut all the lows here, maybe you'd watch this low, which is, what is this low right here? What is the ultimate low? That would have been a few days ago. I got to get this. The one thing I don't like about this pen is that you can't do anything other than the pen while you have it on. So the low is 90.57. So we closed today at
89.46.
89.46. So
yeah, actually we put this one on the 21st. That was the pocket pivot.
Yeah, so you might.
And then it just headed right back below the 10 and the 20 day. So you wouldn't be sitting in that. You wouldn't have waited for it to.
No.
You wouldn't have waited this late. I mean, you would have cut your losses at 3% or 4%, something like that.
All right, why doesn't this want to come down here? Well, it doesn't like me. Anyways, American Woodmark is just hanging along the 50-day. Notice how it does hold the 65-day. It hasn't really violated it yet, but it's hard to say where this is going to head. I mean, it looks to me like you're going code red. All the bongos and the force index up here are all getting nice and red. So that may be indicative of a stock that's ready to bust. If this thing traded over 1 million shares, I might almost be willing to short it at the 20-day because notice how it doesn't seem to be able to get up through the 20-day. And it's in a big L pattern, so I don't know if it's going to make it do a Louis and head back up to the other side. But I'm not so sure about that. Amazon just more extended to the upside. Broadcom had a, let's see, 1, 2, 3, 4. It did have a pocket pivot on Friday, but it was a little extended from the 10-day and 20-day moving average. Now it's drifting back in. So not really one of my favorite names. Alibaba we already talked about. Biogen had a pocket pivot on Friday. You guys can see that, I hope. And it's holding tight as volume dries up. So this might be in position to get moving. This New Oriental, you never buy it on strength. Notice how this looked really ugly, but it undercut all these lows over here. And you got a gray bingo bar in here. And the bingo bar is an oversold indicator, so that would be here. And you undercut the lows in the pattern here. And then once you turn back up above this low here, you could have bought it and you'd be in Fat City. Of course, then you would sell into that and now let it roll back in and see where it goes from here. But I think if you abide by this method of trying to buy these less obvious buy points and patterns in these setups, and then selling into extended strength, you naturally will be pushed into cash before the market starts to roll in. So speaking from my own perspective, I got my account at all-time highs, and I don't really give too much back because I sell into the upside moves, but I find that as things are moving higher, I'm raising cash rather than averaging up and loading up more into the market into strength. And I think that's one way to get into a lot of trouble personally, but averaging up, I think the old method of, you buy the breakout, you're up 2%, you add, then you up another 2%, you add again, now you're all the way in and now you get hammered. And as the stock rolls back in, and I think taking maybe a little bit bigger initial position than you might normally at a sort of undercut and rally setup or some other sort of pattern or setup within the base, then you're in a position to sell into strength and then back away and see what shakes. Eagle Pharmaceutical is just continuing higher, but you can see today it dried up 46% below average on the volume, and you're hanging around the 10-day line. Edwards Life Sciences is doing the same thing, hanging tight along the 20-day line on light volume. Facebook doing the same thing. I think Fitbit, I'm looking for this. I mean, I've been reading a couple other analyst reports on the sales, and they're actually saying that the sales are doing pretty well. So I don't know what's going on here, but like I said, or like we said over the weekend, we'd look for a move above the 50-day moving average as a re-entry signal. The other thing is to look at these lows in the patterns. You got a low here, 1435. You got a low over here, 1436. So roughly in that area, you could undercut and try to rally, but on the other hand, it could just come apart. About half the float is short here. Fabrinet had a pocket pivot yesterday, and it's hanging out, not really coming apart, but not so much in a buy position. Notice Gigamon real tight along the 10-day line. That looks good. You notice that even with the market pulling back today, a lot of these stocks don't look so bad. So I think you should still keep an open mind and understand where your buy points are on the pullbacks. And as long as you can keep your risk to a minimum and you stick to your stop, it's one thing to try and catch a falling knife, but it's another thing to keep trying to, if it gets stuck in your hand instead, to keep trying to hold on to it. You want to pull it out at that point. And so that's why you would have a tight stop. Gold got crushed. We looked at that. What do you think that means, Akshay? You think that's over for gold and silver, or do you think this pullback is going to make them deep doo-doo buy opportunities?
Yeah, the deep doo-doo type, because ultimately QE is still with us all. I think the central banks have no choice but to continue to print no matter what they say. It's all jawboning in the end, and they're political bodies, so they've got to just convince the public, convince the masses that that negative interest rates, lower interest rates, easy money policies have to remain in effect.
Okay.
So I think that's good for gold, and that's not good for currencies in the long run. And obviously gold has its ebbs and flows, and they can be pretty sharp.
Okay,
in both directions.
So let me move this to a more concrete discussion in terms of you see what the chart's doing, right? You see this where you have the big break here and today, and you're coming into the 200-day moving average, which is here, and so you got this big break on heavy volume here. So would you look to buy this at the 200-day line if it got there, and then look for it to bounce off of there? How would you approach this if you were looking to buy this on a pullback?
Well, the thing about gold is it doesn't really follow moving averages, as you can see what it's done to the 50-day.
Right.
So
good point.
I think that a lot of people, though, keeping in mind that a lot of people will use the 200-day as a possible buy point. So if you want to do a quick trade, you could use the 200-day as your entry point, buying as close to that as possible, but also keep your stop incredibly tight. So you're maybe risking 1% or 2% on the trade. But what do I don't think the 200-day is going to be the obvious support point for this. I think it's going to be a sloppy support point that emerges. What I like about the fundamentals behind gold is that it should overall, like I said, in the long run, it should go higher from these levels. But the question is, how is it going to form? I suppose the question could be, is it going to form this downtrend that had occurred since 2011? Is it going to resume that downtrend? I don't think so. I think that interest rates are negative in a number of countries, and central banks are not letting up on their money printing, and so I think that the thing right now is that the dollar is strong, so you have that counter effect that works against the price of gold. So as the dollar gets stronger, gold gets weaker. But also, in the long run, I don't think the dollar, while it's the tallest standing midget, I don't think it's going to be the prevailing, or let's just say I don't think it's going to be in the long run the bet to be made. I'd rather have money in gold rather than the dollar in the long run.
Okay. Grubhub pulling into the 20-day line, but just below it. I think the 50-day line becomes your next entry point, but earnings are due on October 25th. That's an index chart. Intuitive Surgical hanging along the 10-day line. Earnings are due on the 18th of October, so I'm not sure there's anything to do here. We looked at line. Mercado Libre pulling into the 20-day line. That might bring it into a buy spot. Earnings are in the very beginning of November. Momo, we already talked about that. NetEase was up today, but you want to buy this on pullbacks, I think, into the 20-day. Nvidia is extended and probably needs to come into the 10 or the 20-day, but I believe earnings are out on 11/3 on November 3rd. Nevro coming in, so if you bought down in here and you got extended, so I think we liked it somewhere in here along the 20-day. Notice how it did a little Louis pattern. You undercut all the lows in here and then you turn back up. So again, you could have tried to buy it in there. You might have had to work it a couple of times on the trade, and then you go to new highs. So PI, this thing I think needs a lot more time to rest. I thought it was buyable. Whoops. What happened here? What did I do? Here we go. Impinge. I thought it was buyable off the 20-day here, and that was good for a nice trade. Get, what, 15% or so, and now you're rolling back. You go to the top of the range. Now you're coming back to the bottom of the range. Volume is about average. So it might undercut these lows again and set up as a buyable, in a buyable position. So there's silver blowing apart. Square is just hanging along the 10 and 20-day lines. Notice how the 50-day line is pulling up. Where is that exactly, Dr. K? Do you know? The 50-day line is at 10 or 938. So no, I'm sorry. Is that right? No. What am I saying here? 1146. Yeah, there we go. So that's only a few pennies, a few cents above where it's trading. So that might be bought here, but you got earnings on 11.2. This one's just hanging tight along the 10-day line. Atlassian, we talked about this last week, and just blow this thing off. I think it's just too squirrely, and these fake out breakouts here.
Yeah, we should definitely remove this one from the list, but it served its purpose because it had that one screaming day to the upside where it was up double digits.
It was up like
18%
you just gotta
or something. Take profits.
Yeah, in like nothing flat. So here's Palin.
It looked like a fat finger because I don't think there was any news on it.
Something
per se, maybe buyout rumor or something. But yeah, it was a great trade.
Here's Twilio, and of course this is you have a low here of 2480 and a low here of 2470. So those are your two reference lows here. It did, once it undercut here, it did turn back to the upside, so that was good for a little trade. Now it's just flooding around. This could be forming a new base. What are earnings due? I don't know when those are coming out. Probably in the middle of November, I'm going to guess. But it is just kind of hanging out. There's nothing really decisive in here yet. But it looks to me like it could be setting up in a base. Maybe it takes the next earnings report to push it out of there. Twilio, we already talked about that. Ubiquity Networks just hanging along the 10 and 20-day lines. Viva Systems finally gave up on its tight action, broke below the 20-day line, but what you might watch for here is an undercut of this low. So let me blow this up for you. What you might watch for here would be an undercut of this low here that coincides with some sort of a meeting up or break just below the 50-day line. That might bring it into buyable position, but it tends to want to do this. See how it did it once before here, and then it came back out. Did it here, and then it came back out. So you'd want to watch this pullback. And I think in most cases with a lot of these stocks, you want to watch how these pullbacks develop. And I understand it's not as easy as just seeing a breakout and buying it, but, this is not a simple market. I mean, any idiot can see a breakout and buy it, right? It's not so easy. You have to use your judgment or develop some feel for these patterns. And again, that's why I think you need to study Wyckoff and Livermore in addition to O'Neill. Okay. Vuzix, this thing you got to buy at the 50-day line here, and I think that's probably your only spot to be buying it. I wouldn't be buying it up. Weibo we already talked about. Wix is holding tight along the 20-day. Earnings are due in the first week of November, and that's pretty much the list. But you get a sense that most names are continuing to hold up okay. So in spite of the market's funkiness, if you're looking at things on an individual stock basis, you're looking for pullbacks that you can buy into and trying to be opportunistic in that regard. So I think that's really the approach that you want to maintain. And I wouldn't get into this rigid view that it's a bullish or bearish market, because in reality, if we look at these index charts, the NASDAQ is still in an uptrend, okay, and the S&P 500 is really still in no trend. So there's really no trend. There are opportunities in individual stocks in between all this stuff, but there's no real trend here. So, you know, you can't squeeze blood out of a turnip. Is that right? Yeah. You can't squeeze lemon juice out of limes. That doesn't really make any sense, but you know what I mean. You don't really have a really sustained trend here, although you're getting things in individual stocks. And I think you have to be open to the concept of some rotation. So as Acacia and Twilio take a break, you might see Momo comes to life, Weibo comes to life, and some of these other names that we've liked. Maybe you see an EVBG becomes a new interesting stock to play with, and it's relatively young. Is it EVGB or EVBG? Someday I'll get this right.
That's it.
But yeah, they keep screwing me up. So, you know, not everything can be Nutanix. Nutanix. That thing went nutty for sure. Now here's TYHT. Is that right? Yeah, here you go. Here's why you don't buy stocks on the first day of trading. This thing was priced at $8. It opened just above 8, ran all the way up to a high of 34.88, and now it's all the way back below $8. So imagine if you were the poor slob who bought it up here. You're now just getting wiped out. So anyways, what else we got, Dr. K? So can we conclude that it's hard to tell what the market's necessarily going to do from here? Maybe we just chop around into the election. But I think if you operate on the basis of what individual stocks are doing, you can see some things kind of setting up. So I think you want to be aware of stuff like that. You know, on the short side, I've been messing around with names like, say, Taser. I think I talked about this last week. Remember, and once it gapped down yesterday, that was to me a shortable gap down. Now it's undercut this low. Maybe it turns and rallies. I think we talked about Smith & Wesson. That was shortable today at the 20-day line on the reversal. So that came down after meeting up more or less with the 200-day line and rallying. Netflix is one that I was previously looking at as a short, but on rallies up to the 200-day line, and it pushed right through that on Friday, and then yesterday you had this big breakout kind of move, and I think there's some buyout rumors, Disney for Netflix or something, but I wouldn't mess around with that on the short side. There aren't a lot of things that look like screaming short sale setups, so that's another clue that we're in a very foggy sort of environment where you're not getting any clear signals one way or other. But I think if you operate on the basis, again, of buying into constructive weakness, selling into extended strength, and raising cash thereby, then you'll be in a position to deal with the choppiness of the market. And that's an approach I've been using this year, and I'm steadily moving up. Not, you know, I don't think I'm going to be up triple digits. I would say if I get, you know, somewhere around 70-80%, I would be very, very happy, and we'll see what happens. Still got 3 of the best months for making money, at least historically for me. Do you find that to be the case too, Dr. K? That I find if I go back, most of my money during any year is made between October and the end of the year.
Yeah, well, seasonally they are. That's a good time for the market. So I mean, well, October, despite people's belief that it's the crash month, nevertheless it tends, seasonally speaking, the last 3 months are good months.
Yeah, And so like Dr. K and I were putting it a couple of webinars ago, it's not a matter of trying to hit home runs. It's a matter of maybe hitting a single or a double and then stealing a couple of bases to get home. So, and it's kind of like that. I think it's probably a apt analogy in this market. So, but I think that's really what the market's telling you right now. So I wouldn't necessarily get all bearish here and think that we're going to sell off. Like I said, I have a little bit of the UVXY, like an, I don't know, what do I have here? Like a 4% position or something like that, 5% position in the UVXY, and see if we gap down tomorrow or something. But I don't know. We'll see. It's kind of iffy. So I think I may be looking at things to buy tomorrow as they pull in. So I've been messing with some things, but sold into the moves like Momo and others. And the EVBG was another nice little move, and that kind of came in. But nothing really that I would say really juicy that I want to sit with, you know. So, but we'll see. But I think you just continue with that sort of approach, and you'll probably be able to stay out of trouble. But and I would also caution you against buying breakouts as another rule of thumb to avoid getting into trouble very quickly. Because number one, you're going to be too late, and number two, you're buying at a point where you make yourself very vulnerable to a snapback or a failed breakout that sets you underwater pretty quickly, and then you're just all screwed up. Anyways, anything else to add, Dr. K, before I shut it down?
Yeah, no, I should stick with the ebb and flow. This market has that kind of rhythm. It's been with us for the last, almost the last couple of years,
Yeah.
where there's a lot of chopping going around, and you know, it's, you know, some of these patterns look like, yeah, like right now it looks like the S&P wants to go lower, but as we know and as we've written, if it does go lower, that might only be for a couple days, and it'll find a shallow floor and perhaps resume an uptrend, or say resume an attempt to new highs.
Yeah.
And then fail at that and repeat the cycle all over again.
Yeah.
So, you know, keep an eye on your stocks in terms of this rhythm. I think that's the best way. But I think that's always, if you're playing stocks, it doesn't really matter what the averages are doing so much as what your stocks are doing. And that was true in the 90s. So what's true in the 90s is still true today.
Yeah, at least in that respect. All
in
right.
that regard, yeah.
Yeah, that's all we got, you guys. Thanks for showing up. We'll catch you next time. So have a great rest of the trading week, and we'll talk to you later. Bye.
Take care, everyone.